This market just changed in a way that could cost you thousands of dollars if you don't have the right plan. And here's the crazy part, most people have no idea this is even happening. So today we're going to break down exactly what changed this year, who's making moves, and why it matters for you. And by the end of this video, you'll see the San Diego market in a whole new way, so let's get into it. All right, here's what everyone keeps talking about. You pick up any market report right now and the numbers look pretty solid overall. Home prices are sitting somewhere between $970,000 and $1,015,000, and after all the ups and downs, that almost feels like a stable market. Inventory is ticking up too. Active listings just hit 5,100 in March, up 39% from last year. Most experts are calling it a balanced market. And honestly, I get it. After years of chaos, a little normal sounds pretty refreshing overall. But check this out. Zillow says San Diego home values actually dropped 2.5% year over year to $1,015,000 as of June 2025. But Redfin says June prices fell 4.2% to a median price of $970,000. Then Rocket Homes comes along with July's numbers, saying the median sales price is actually $879,000. Now, as you can see from all three of these numbers, they are very different, and that's not normal. When there's that much disagreement in the data, it's a sign that something's going on beneath the surface. Because when you start looking at who's putting their homes on the market right now and why, you'll see this isn't just a story about a market balance. It's about people making calculated moves before something bigger hits. So while everyone's busy focusing on price drops, they're missing the bigger story. When someone says balanced market, think about the numbers I just showed you. But before we get into what just changed in 2025, if you want to stay ahead of San Diego real estate trends, hit that subscribe button. I'm always breaking down what's happening in the market, sharing local insights, and pointing out where the real opportunities are hiding. All right, now let's talk about the changes happening right under everyone's noses. The biggest shift isn't showing up in those headline price reports everyone loves to argue about. It's in how fast homes are selling and what buyers are actually doing. And once you see it, you can't unsee it. Right now, homes are sitting on the market for about 28 days. Last year, just 16. That might not sound like a big deal, but in real estate, that's a big difference. In North County, it's even slower, 31 days on average. That's about 40% longer than a year ago. And here's where it gets really interesting. This timing shift is flipping buyer psychology on its head. We've gone from a buy now or miss out forever to let's see what comes on the market next week. It's basically like dating after a bad breakup. Some people just need more time. But before I get into how this is creating two completely separate markets, let's look at how much things have actually changed. In June, the average time on market from San Diego County was 22 days, up from 18 in June 2024, a 15% increase. We're watching a slow motion exit from that wild, lightning fast market we got used to. And here's the kicker, price cuts are pretty much everywhere. In June, 27% of detached listings and 37% of attached listings had price reductions. I'm seeing sellers slash prices between $50,000 and $100,000, sometimes just a few weeks after they listed it. Most of this is in the $700,000 to $1.2 million range, and these were the homes that used to spark bidding wars in like 2 days. Now they're just sitting there like leftover pizza. Still good, but not everyone's fighting over it. But here's the twist, high-end homes are still flying off the shelf, at least relatively speaking. Places over $2 million in La Jolla and Del Mar are selling in about 22 days, barely slower than last year's 15 days. That said, luxury sales can be moody. We've seen them drop 55% at times, so that could change pretty quickly too. Right now, we've got two markets moving at two totally different speeds. Your experience depends entirely on your price point and your zip code. So who's really behind all this new inventory? The answer might surprise you. Here's what's really interesting about who's putting their homes on the market right now. Because when you understand why they're selling, you start to see where things could be headed. A lot of homeowners are cashing out while prices are still high. They're not hanging around to see what happens next. Even folks with rock bottom interest rates are saying, you know what? This could be as good as it gets. And in a few minutes, I'll share you the exact game plan you need for 2025, plus the neighborhoods I think could grow by 8 to 10%, and why this might be the last normal year before the market changes for good. But first, let's talk about exactly who's listing and why it matters to you. So this is a big shift from the rate lock idea we heard so much about in 2023 and 2024. Now people are spotting a window of opportunity and jumping through it. And it's not just regular homeowners, investors and out-of-state buyers are in the mix too. Some are still picking up properties in specific areas, but others are selling off the ones they bought a few years back. They want to lock in those gains while the market's still relatively hot. Most of this new inventory isn't coming from new construction though, it's resale homes. And here's the wild part, new builds are actually selling for $57 less per square foot than existing homes. That's one of the biggest gaps in the entire country right now. On average, new homes are going for about $552 per square foot, while resales are at $609 per square foot. We're also seeing some big changes to the ADU policy. The city council rolled back parts of the bonus program, capping the number of ADUs, adding fees, and adding parking requirements too, but also allowing existing ADUs to be sold separately as condos. Short term, that could slow down ADU growth. There's also more infill development too. Builders builders are getting height and setback waivers in transit corridors, but even with the streamlined rules, most of the new housing likely won't hit the market for a couple years. And honestly, here's what matters even more than all that supply talk. Buyers are completely changing how they approach this market. Now, this is where things get really interesting. The biggest shift right now isn't just about supply and demand. I mean, that is a big part of it, but it's about how people are actually thinking. And when that changes, it changes everything. Remote work is still playing a role in where people want to live. About 16% of San Diego workers are still working from home at least part of the time, down from over 22% just 3 years ago. That means location is starting to matter again. People want to be near transit, in walkable areas, close to restaurants, shops, all that good stuff. But here's the flip side of all of that. A lot of folks are basically rate locked. If you've got a mortgage rate under 4% and you try to move, you're probably staring at a much larger mortgage payment. That's enough to get most people to say, maybe my yard is big enough. Meanwhile, cash buyers are getting the best deals, often around 10% off compared to finance buyers. On a $930,000 home, that's about $93,000 in savings, or as I like to call it, enough to fund my kids' college. Well, maybe at least community college. And what's really shaking things up is the rise in inventory. We're seeing more listings, more detached and attached homes, and buyers aren't feeling the same pressure they did before. Some people are even waiting 2 or 3 weeks before actually putting in an offer just because they can. We used to have about 1.5 months supply of inventory. Now we're close to 4 months supply for single family homes. In other words, buyers have leverage again, something we haven't seen in years. We've gone from buy now or miss out forever to let me sleep on it, and this is completely changing how deals get done. So how do you take advantage of all this? Here's your game plan. If you're buying, timing matters more than ever. July through December is still your best window for less competition and more motivated sellers. But if you wait until spring, you may have more options to choose from, but there will likely be more buyers as well. But honestly, with all that inventory out there, buyers pretty much have more leverage all year round. But here's my favorite move right now. Check out homes that have been sitting for more than 30 days. That's where some sellers are starting to get nervous and are way more open to making a deal. But keep in mind, a lot of these people don't have to sell right now, so they may end up taking their home off the market or sell it at a discount. So completely lowballing people also doesn't work either, just FYI. Now, if you do have to sell right now, it's time to adjust your expectations. Like I said before, homes are taking around 28 days to sell right now instead of 16, and the prices you saw in the springtime aren't holding up right now, unfortunately. That's not a sign of something's wrong, it's just kind of the new normal right now. And just to be completely honest, if you could actually wait to list your home in the springtime, you'll likely get a much better price than you will right now, especially if rates come down a little. But even then, be prepared to have your house sit on the market for a lot longer than you're used to, maybe 45 to 60 days. And yes, you might have to adjust your price. That's not giving up, that's just being realistic. Now let's talk about a few neighborhoods that could see some growth in the near future. Barrio Logan, National City, and City Heights are shaping up to be real opportunities. We could see price growth of 8 to 10% in each year in these areas as they continue to grow. Another one of note is the price gap between Carmel Valley and Rancho Penasquitas. They are neighborhoods that are right next door to each other, but the price difference between each neighborhood is pretty large and it's a lot bigger than it used to be. So I definitely keep an eye on PQ as people get priced out of Carmel Valley. Then there's the coastal spots like Del Mar, Encinitas, and Carlsbad, which continue to be popular, but their price points are pretty high. So if you're looking for a more affordable coastal town, it's hard to ignore Oceanside. Now here's why I think 2025 is so important. This might be the last year that still feels semi-normal before everything shifts. San Diego has had 13 straight years of price growth since 2012. That's almost double the usual 6 to 7 year real estate cycle. COVID and low interest rates stretched it out even longer. And now, with inventory rising fast, work patterns shifting, and major policy changes kicking in, the balance is starting to tip. We're moving from a seller-controlled market to a buyer-driven one where buyers can actually afford to be picky again. If you're thinking about making a move, don't assume the current setup is going to last forever. The window could be a lot shorter than people realize. Watch for inventory to keep growing beyond 2025 levels, keep an eye on mortgage rates dropping below 6%, and pay attention as new zoning rules and housing policies start unlocking more supply. San Diego is adding thousands of new jobs a year, and it's growing its population by approximately 0.5% annually. Put that next to policy-driven building changes, and 2026 and 2027 could look very different from today. So there you have it. San Diego's housing market shifted this year in ways most people aren't seeing quite yet. We're not in some stable, balanced market like the headlines say. We're definitely in transition, and that's creating opportunities and challenges depending on your situation. And if you're thinking about buying or selling here in San Diego, now's the time to get smart about your strategy. So don't wait. Email me at bern@off56.com and let's take the first steps together. This housing market doesn't sit still for anyone. And before you go, check out my next video right here. It's all about a new development that's reshaping North County, San Diego. And if you're buying in this area, you don't want to miss it. Thanks for watching, and I'll see you in the next one. Bye.